Assalamualaikum to Madam Siti Fatimah. We from Group MAC2204C would like to present MFRS 8, which is Operating Segment, and MFRS 134 of Interim Reporting. Company that we choose is Malayan United Industry Berhad. I'm Nur Aisyah binti Sabri as your new Accountant Executive. First of all, let me introduce our team, which is Muhammad Rahimi bin Muhammad Nizar as Junior Accountant, Siti Maisara binti Muhammad Zabidi as Senior Accountant, and lastly, Fahim Naqibah binti Ismail as Senior Accountant. Without further ado, let's get started to the company background. Malayan United Industry Berhad, which is called as MUI, is listed on the main market of Bursa Malaysia Securities Berhad. It was incorporated in Malaysia on 28 May 1916 and listed on 30th June 1971. MUI is an investment holding company. Through its subsidiaries and associated companies, the MUI Group primarily engages business activity, which is retailing, Metro Jaya, hotel, food and confectionery, financial service, and property development. With its corporate headquarters based in Malaysia, the group's international operations span the United Kingdom, continental Europe, the United States of America, USA, and the Asia Pacific region. Next, we go to management approach, which is factor to consider having a segment reporting. There are three factors to be considered, which is nature of the business activity, the existence of managers responsible for the activity, and information to be presented to the board of directors. First, nature of the business activity is the activity that a business engages in for the primary purpose of making a profit maximization for the organization. As we know, MUI is having 6 core business activity, which is retailing, hotel, food, fast food chain, property, and financial service. Customers come from the middle and upper, where X and rates. Promotion is done by online marketing and providing various service and source of transportation as the method of distribution of product and service. Second, existence of manager responsible for the activity. Each segment reporting activity should be given responsible for manager to plan, organize, lead, and control the organization. However, manager educates the organization tasks, function, and activity that correspond to their position in the company to make sure that business and employees are working towards the accomplishment of the organization goal. Third, information to be presented to the board of directors. All segmental reporting should be presented to the board of directors in an annual or quarterly report for every financial period. This provides accessibility of information to the board of directors to make any decision-making process. Next, I will pass to Fahim for the next presenter.
Thank you, Aisyah. Hi, my name is Fahim Naqibah binti Ismail, as a new account executive. I'm going to continue present about type of segment. We have 5 types of segment, which is retailing, hotel, property, fast food chain, and other. Our first type of segment is retailing, operating department and specialty store, and through associate. First, use and sub-licensing of trademark and copyright, and second, design, manufacture, sourcing, distribution, and sale of garment and accessories. Our second type of segment is hotel, holding of hotel properties and hotel operation, food manufacture, sale and marketing of chocolates, confectionery, and related products. Our third type of segment is property, property development and investment, sale of oil palm, fresh fruit bunches. Next is fast food chain, operating chain of restaurant. And the last one is other, which is investment activities and other including property investment and licensing of a trademark through an associate. The revenue is in the segment and eliminated on consolidation. I'm going to continue our presentation with Chief of Decision Making. Nur Muhammad is our Chief Operating Decision Maker in Malayan United Industry Berhad. He is responsible for strategic decision making. And operating segment, operating results are reviewed regularly by the Chief Operating Decision Maker to make decisions about resources to be allocated to the segment and assess its performance. and for which discrete financial information is available.
Hi, Assalamualaikum. My name is Siti, your senior accountant. Now, I'm going to discuss about the process to identify reportable and non-reportable segment. Under MFRS 8, an entity shall report all the information separately with regards to the operating segment if it passed the 10% quantitative threshold test and 75 test if the company applied the revenue basis. The 10% qualitative threshold test consists of 3 tests, which are revenue basis, profit or loss basis, and total basis, where they must meet the requirement of 10%, and if they don't, they will be combined and disclosed under all other segments in the segmental report. Since Malayan United Industry Berhad is using revenue basis, the 10% threshold will be evaluated based on their total revenue. After the determination of the reportable segment, the company must do 75% test, where the total external revenue of reportable segment over total external revenue of all segments should reach at least 75%. Next, this is the current segment report of Malayan United Industry Berhad. The table shows that the company currently running 6 types of segment. The total revenue for all of the segment is 300,039 and 279 after deducting the elimination. Next, I'm going to show the reportable segment and non-reportable segment. As you guys can see in the table, there are 4 reportable segment and 2 non-reportable segment. For retailing, they are just 7.36% and others is 1.95%. The calculation show that they did not fulfill the at least 10% threshold test. Therefore, they are non-reportable segment. Meanwhile, the percentage of total revenue for the hotel is 35.51%, the food is 15.15%, the fast food chain is 16.16%, and the property is 25.85%. Therefore, they are reportable segment. Next, the table shows the operating profit or loss test. The percentage of largest of operating profit or operating loss show that the retailing is 5.81%, the hotel is 64.64%, the food is 21.91%, and the fast food chain is only 3.72%. However, for the property and others show 71.79% and 83.15% each. As we can conclude that retailing and fast food chain segment does not fulfill the 10% threshold test. Therefore, both segments are non-reportable segment. Meanwhile, for the hotel, food, property and other segment have fulfilled the requirement of 10% threshold. Therefore, they are reportable segment. Moreover, we are going to show you the identifiable asset test. There are 3 non-reportable segments which consist retailing segment where just 1.9%, food with 6.15% and fast food chain with 8.8%. However, for reportable segment are consist of hotel segment for 41.03%, property with 22.38% and other with 15.68%. Based on segmental report prepared by Malayan United Industry Berhad, the calculation of 10% threshold test that we showed at the previous slide found that there are 4 reportable segments. It consists of hotel, food, fast food chain and property. Meanwhile, the other 2 segments are non-segment report, which consists of retailing and others. Next, the company must do the 75% threshold test, and we can find that the total external revenue of reportable segment for Malayan United Industry Berhad reached 92.76% for the year ended 2022. Next, I will present the new segmental report as shown in the slide. The new segmental report of Malayan United Industry Berhad is reconstructed from the reportable segment and non-reportable segment. There are 4 reportable segments which consist of hotel, food, fast food chain and property, whereas both non-reportable segments are essential in determining the reportable and non-reportable segment as well as the preparation of segmental report. Next, Mr. Rahimi will continue the presentation.
Assalamualaikum. My name is Muhammad Rahimi and I'm a junior accountant. For this part, I would like to present about advantage and disadvantage of segment reporting. Looking at the eyes of this standard, there is some advantages and disadvantages that could be highlighted. In the terms of advantages, using a management perspective, it could increase user of customer ability to predict future and cash flow. Segmental reporting also will highlight risks that management think are important and that will result in increase of interim reporting. On behalf of the disadvantages, first, segmental information might be misleading to the investor and external user while read it. Other than that, inconsistent segment may be reported between the groups. Third, data manipulation can cause a significant damage, such as company customer trust is broken. Thank you. I will pass to Aisyah.
Thank you for our junior accountant Rahimi. I will continue my present with the basis of preparation of the interim report. Malayan United Industry Berhad has been prepared in accordance with Malaysian Financial Reporting Standard MFRS 134 Interim Financial Reporting Paragraph 9.22 of the main market listing requirement of Bursa Malaysia Security Berhad and the requirement of the Company Act 2016 in Malaysia. This interim report will be presented together with the group audited financial statement for the financial year 30th June 2022. This statement, we can say MUI is used the discrete technique as the basis for preparing the interim report under MFRS 134 Interim Financial Reporting. This period should be considered a separate accounting period from the annual cycle. Interim reports are designed to forecast and summarize the financial position and financial performance of the discrete time period, which may be a section of the annual period. Revenue and expense items must be evaluated and recognized in the same way that annual financial statement that prepared as per the discrete method. Since the most recent annual financial statement were consolidated and interim financial report is issued on a consolidated basis. Next, I will pass to the next presenter, Rahimi.
Next, I will explain two accounting policies that use in preparation and the interim report. First is property, plant and equipment. All items of property, plant and equipment is initially valued at cost. Costs cover expenses that are directly related to the assets acquisition as well as other expenses that are related to preparing the asset for its intended use. Subsequent to initial recognition, all property, plant and equipment other than freehold land and buildings are stated at cost less any accumulated depreciation and any accumulated impairment loss. An item of property, plant and equipment is recognized upon disposal or when no future economic benefits are expected from its use. Any gain or loss arising from recognition of the asset, being the difference between the net disposal proceed and the carrying amount, is recognized in profit or loss. Second is lease asset. The group assess whether a contract is or contains a lease, and the exception of the contract. The group recognize a right of use asset and corresponding lease liability with respect to all lease arrangement in which it is the lease, except for low value asset and short-term lease with 12 months or less. The group recognize a right of use asset and a lease liability at the lease commencement date. The right of use asset that do not meet the definition of investment property and the associated lease liabilities are present as a separate line item in the statements of financial position. The lease liability is initially measured at the present value of the lease payments that are not paid at the commencement date, discounted by using the rate implicit in the lease. If this rate cannot be readily determined, the group use its incremental borrowing rate. So, the minimum content that should be present in interim financial report is a set of condensed financial statement for the current and comparative period information. There are 5 types of interim report, which is condensed consolidated statement of profit or loss and other comprehensive income, statement of financial position, statement of changes in equity, statement of cash flow, and lastly, notes to the interim financial report. Interim reports are used to provide an overview of the company's financial performance before the end of the financial reporting cycle. This helps increase communication between the public and the business while also providing investor without the minutes financial information.
We will moving on to current and comparative period of each statement prepared as under MFRS 134 interim report. Let's start with statement of financial position SOFP. The current period for SOFP is 1st April 2022 until 30th June 2022, 3 months, and for the comparative period of SOFP is 1st January 2021 until 31st December 2021, 12 months. Next will be Statement of Profit or Loss and Other Comprehensive Income, SOPL and OCI. For the current period is 1st April 2022 until 30th June 2022, 3-month quarter ended. For the comparative is 1st April 2021 until 30th June 2021, 3-month quarter ended. However, for cumulative period for the current period is 1st April 2022 until 30th June 2022, 6-month ended. And for the comparative is 1st January 2021 until 30th June 2021. Moving on to the Statement of Cash Flow, SOCF. The current period is on 1st April 2022 until 30th June 2022, 6 months ended, and the comparative period for SOCF is 1st January 2021 until 30th June 2021. Last but not least, the Statement of Changes in Equity, SOCHE. The current period is 1st April 2022 until 30th June 2022, 6 months ended. And for the comparative period is 1st January 2021 until 30th June 2021, 6 months ended. That's all from me. Next, I will pass the rest of the presentation to Ms. Fahim Naqibah.
Next, we're going to continue our presentation with adjustment. Our first adjustment is on 16 June 2022, the company had issued new share of 40,404,000 share at 4.95 cent. The company should issue new share on 25 April 2022 because the price per share at that time is 5.14 cent. As it shown on our slide, our share capital before the adjustment is 93,866,000 ringgit. After the adjustment, our share capital is 93,942,767 ringgit. Our second adjustment is on 6 May. The company had entered into a sale and purchase agreement to dispose piece of leasehold land with factory building with a carry value of 309,000. Land and building is an asset that has a long useful life. The fair value will keep increase year by year. The company can get more gain on disposal if dispose the building in the future. As in our slide, extra of financial position before our adjustment is property, plant and equipment is 67,280,000 ringgit. But after the adjustment, property, plant and equipment is 76,537,000.